Welcome. Today we are going to dive into something that can make a big difference in your trading skills. We are going to explore how to use the TPO chart in RTrader Pro. By the end of this guide, you will know how to set up and understand TPO charts to make better choices when trading. Stick with us all the way through because each part will add to your understanding of the bigger picture. Imagine having a roadmap that shows exactly where the market felt comfortable, where it spent most of its time, and where it moved quickly. That is what a TPO chart offers you, a clear view of market behavior that helps you uncover its structure and hidden patterns. Let us start by explaining what a TPO chart really is. TPO stands for Time Price Opportunity. This chart shows where the price of an asset spent most of its time during a trading session. Imagine if you could see exactly where the price lingered, which can tell you where the market feels the most comfortable. TPO charts are great for helping traders understand the structure of the market. You can see where the price found value and where it moved quickly, all of which is valuable information. TPO charts also display various recognizable patterns that can give you further insights into market behavior. These patterns include balanced and imbalanced profiles, which indicate different market conditions, such as periods of agreement between buyers and sellers or times when the market is searching for a new value. By understanding these patterns, traders can get a clearer sense of market dynamics and anticipate price movements more effectively. One such pattern is the D-shaped profile, which indicates a balanced market where both buyers and sellers are in agreement, leading to consolidation. The profile appears like a bell-shaped curve, with the bulk of trading activity concentrated near the center. A balanced profile often signals that the market is comfortable at a certain price range and is waiting for new information before making a decisive move. This can be a signal for traders to prepare for a potential breakout in either direction, depending on the next influx of market information. Another important pattern is the P-shaped profile. This pattern suggests a bullish sentiment, often formed when buying interest causes prices to rise sharply, followed by some consolidation. The profile has a concentration of trading at the lower end, with a tail extending upwards showing buying pressure. P-shaped profiles are often seen after strong upward movements, and they indicate that buyers have gained control of the market. Traders can look for opportunities to enter trades during pullbacks to significant levels like the point of control or previous support within the profile. Conversely, the B-shaped profile is indicative of a bearish market sentiment. It generally forms after a strong downward move where sellers dominate initially, and then buying support is found at a lower level, leading to stabilization. This profile has a large volume of activity at the upper end, with a tail extending downwards. Traders might use this pattern to identify opportunities to short the market, especially when the price retraces back to resistance or point of control levels. The double distribution profile is another crucial pattern. It features two distinct peaks of high trading activity, separated by an area with low activity, suggesting that the market has moved away from an old value area to a new one. This shift often follows a major event, such as economic news or significant data releases. Traders can utilize this pattern to trade between the distributions or look for potential breakouts to further new value areas, often capturing large directional moves. Additionally, the thin profile or spike profile represents a rapid move in the market, characterized by very little trading at most price levels. This pattern often signifies an emotional market response, driven by news or unexpected events. Thin profiles are prone to retracements since the market moved too quickly to establish value. When revisited, these levels may provide either support or resistance, depending on the direction of the initial spike. Traders should be cautious with these profiles as they often require quick decision-making, and pullbacks can be common. The recognition of these patterns in TPO charts helps traders gain insights into the underlying market behavior, whether it is consolidating, trending, or in a state of price discovery. By identifying and understanding these different market profiles, traders can make more informed decisions about when to enter or exit positions, where potential breakout opportunities may occur, and how to adjust their trading strategies based on the market's current structure. One pattern you may notice is the D-shaped profile, which indicates a balanced market where the buyers and sellers are in agreement, leading to consolidation. In this case, you would see a bell-shaped curve where most trading occurred near the middle. A balanced profile like this often signals that the market is comfortable at a particular price range and is waiting for new information before moving decisively. Traders usually wait for a breakout in either direction before entering a position when the market shows this type of profile. Another pattern is the P-shaped profile, which often suggests a bullish market with early buying interest that causes prices to rise. This profile has a concentration of activity at the lower end and a tail extending upwards, indicating buying pressure. The P-shaped profile generally forms after a strong up move, followed by some consolidation. This indicates that the buyers are in control, but the market may need to take a breather before continuing the upward movement. Traders often look for opportunities to enter on pullbacks to the point of control or support levels within this profile. On the other hand, the B-shaped profile points to a bearish market, where there was initial selling pressure that found some stability. It is characterized by a large upper concentration of trading activity and a tail extending downward. The B-shaped profile often forms after a sharp downward move, suggesting that sellers dominated initially, but the market found some buying support at lower levels. Traders might use this pattern to look for short opportunities if the price moves back to the point of control or resistance levels. Another important pattern to recognize is the double distribution profile. This profile has two distinct peaks of high trading activity, often separated by an area with little activity. This pattern suggests that the market has re-evaluated its fair value and moved to a new price range. It typically forms after a significant event, like news or economic data, that shifts the market's perception of value. When you see a double distribution, it is often a signal that a major shift has occurred, and traders might look to trade between the two distributions or watch for further breakout signals. The thin profile or spike profile is another pattern worth mentioning. This profile is characterized by a thin, vertical structure with very little trading volume at most price levels. It usually indicates a fast-moving market driven by emotional buying or selling. Thin profiles suggest that the market moved too quickly to establish value, and it may come back to test these levels later. Traders should be cautious with thin profiles, as they are often followed by pullbacks or retracements to more established areas of value. Recognizing these patterns helps you to anticipate potential breakouts or reversals. Understanding the context behind these profiles allows traders to be more prepared for what might come next. In RTrader Pro, this tool gives you a close look at market activity and helps you identify key levels like support and resistance. Knowing this means you have a better shot at making accurate predictions about where the price might go next. To get started, let us set up a TPO chart in RTrader Pro. First, open RTrader Pro. Once you have opened the platform, navigate to the section for charts. you will see various chart types you can add. Select the TPO chart. Sometimes it is called the market profile. After that, a new chart window will pop up. The next thing to do is to adjust the time settings. You can choose a time frame that fits your trading style. You can go for daily charts, weekly charts, or even intraday charts if you are day trading. Picking the right time frame depends on how long you plan to hold your trades. If you are a day trader, you might want an intraday TPO chart. But if you are a swing trader, a weekly chart could be a better choice. Next, let us customize this chart to meet your needs. You can adjust the time periods for each TPO. Most traders use 30-minute intervals. However, you can modify this to fit your own style. If you want more detailed analysis, you could use shorter time intervals. If you want a broader picture, longer intervals might be better. Another way to make the chart useful for you is to customize the colors. Our Trader Pro allows you to pick different colors for TPO blocks, which can make it easier to see the value area, the point of control, and other important details. Also, make sure you enable the lines that highlight your value areas and points of control. These areas are important as they help you see where most of the trading happened and where the price lingered. Now, let us look at some key features of TPO charts. The point of control is the price level where the most time was spent during the session. In our Trader Pro, it is marked by a horizontal line. This shows where the market thinks the fair value is. The point of control can serve as an important reference for support and resistance, and it often indicates where market participants are willing to transact the most. Another important feature is the value area. This is the price range where 70% of the trading occurred during the session. This range is crucial because it represents where the bulk of trading activity happened, suggesting a consensus on price. The value area often acts as support or resistance, and price tends to revert to this zone if it moves away. Understanding the value area can help you identify zones of equilibrium and potential turning points for price movement. You will also want to note the initial balance. The initial balance is the price range established during the first hour of trading. This initial range is important because it sets the tone for the rest of the trading day. If the price breaks out of this range, it can signal a significant move, either upward or downward. Traders often watch for breakouts from the initial balance to identify trend days versus range-bound days. Another key feature to consider is the concept of single prints. Single prints occur when price moves quickly through a range without much trading. In a TPO chart, these areas appear as single letters or a thin column, indicating that price did not spend much time at those levels. Single prints can be seen as gaps in trading, often acting as weak points that price might revisit. When price returns to these levels, it is common to see reactions, as they represent areas where the market previously moved too fast to establish fair value. The concept of poor highs and poor lows is also relevant in TPO charts. A poor high or poor low is a level that appears unfinished, meaning that the price did not experience a strong rejection. In a TPO chart, this can manifest as a flat top or bottom, suggesting that the auction process was incomplete. Poor highs and lows often get revisited later, making them important reference points for potential reversals. Excess highs and excess lows are another feature of TPO charts that traders look for. Unlike poor highs and lows, excess highs and lows occur when the market aggressively rejects a level, creating a tail or spike in the TPO profile. This excess represents a firm rejection, often signaling a key turning point in the market. Traders can use these levels to identify strong support or resistance zones. Another significant feature is the concept of the TPO count, which involves looking at how many TPOs or letters are printed at each price level. A higher TPO count indicates a price level where market participants were comfortable trading for an extended period, reinforcing its role as a support or resistance level. Conversely, a low TPO count or areas with fewer TPOs indicate that the market moved quickly, which may become important areas for potential retracement. These are the main features of TPO charts, and they all provide valuable clues about market behavior. By understanding the point of control, value area, initial balance, single prints, poor highs and lows, excess highs and lows, and TPO counts, traders can better anticipate market movement and make informed trading decisions. So, how do we interpret a TPO chart in RTrader Pro? A balanced market profile looks like a bell curve. When the profile is balanced, it means that buyers and sellers are agreeing on the price, and the market is consolidating. In this situation, you might wait for a breakout before you enter a trade, as the market is showing equilibrium and lacks directional conviction. This type of profile indicates that market participants are comfortable at current levels, and any breakout from this balance could signal the start of a directional trend. On the other hand, an imbalanced market profile is more vertical and shows that the price is moving quickly from one level to another. This indicates that the market is in a state of price discovery, searching for a new fair value. Imbalanced profiles are often characterized by strong momentum and directional movement, which makes them excellent opportunities for trend trading. In these situations, you may observe a series of single prints or thin areas where price moved so rapidly that there was little trading activity. These profiles suggest urgency in the market, either from buyers or sellers, as the price pushes through levels in search of stability. Another key feature to pay attention to is the presence of single prints. Single prints are areas where the price moved quickly with very little trading, which means there was not much agreement among participants at those levels. In RTrader Pro, these areas can act as future support or resistance if the price revisits them later. Single prints represent zones of weak structure that are likely to be retested, as the market often seeks to confirm whether these areas were justified in their rapid movement. For example, if a single print area was formed during an upward rally, it could act as support when the price returns to that level. Conversely, if it formed during a downtrend, it could serve as resistance. Understanding these patterns helps you to distinguish between a consolidating market and one that is trending or in price discovery. Balanced profiles may encourage you to wait patiently for a breakout, while imbalanced profiles provide opportunities to capitalize on strong directional moves. Recognizing where single prints occur within these profiles adds another layer of insight, allowing you to anticipate potential reactions as the market retests these zones. Using TPO charts is also about finding good trade setups. These charts are great for spotting support and resistance levels. Key zones like the value area high, the value area low, and the point of control are all important levels where price might react. Traders can use these levels to decide where to enter and exit trades. One popular strategy is the value area reversion. If the price moves outside the value area but then returns inside, there is a good chance that it will move across to the other side. Traders often look for these reversion opportunities to profit within the value area. When the price re-enters the value area, it often continues moving towards the opposite end, providing a chance for a profitable trade. This strategy works best when there is evidence that the market is returning to equilibrium, such as weakening momentum on the move outside the value area. Another common strategy is the breakout. If the price breaks out of the initial balance or value area with strong momentum, it could be the start of a new trend. To confirm this breakout, you want to keep an eye on volume. If the volume is also strong, the breakout is more likely to be real. Strong volume indicates that there is genuine interest behind the move, which reduces the likelihood of a false breakout. A successful breakout might also be followed by a pullback to retest the broken level, which could provide a secondary entry point with a more favorable risk-reward ratio. The initial balance breakout strategy specifically focuses on the first hour of trading, where the initial balance is defined. When the price moves beyond this range with increasing momentum, it often signals a trend day. Traders can use this breakout level as an entry and watch for sustained price action in the breakout direction. The initial balance also helps determine whether the day will be range-bound or a strong trend day. This is crucial information that traders can use to adjust their strategies accordingly. Additionally, identifying single prints during a breakout can be very useful. Single prints are formed when the price moves so quickly that it does not have the opportunity to establish a lot of TPOs at certain price levels. These areas tend to act as potential support or resistance zones when the price returns. A breakout that leaves behind a single print suggests a strong conviction by market participants, indicating that these areas may become important reference points later on. Another advanced pattern traders watch for is the failed auction. This occurs when the price breaks out of a value area or initial balance, but then quickly reverses and re-enters the value zone. A failed auction is an indication that the market rejected those higher or lower prices and is a strong signal for a reversal. Traders often use this as an opportunity to enter positions in the opposite direction of the initial breakout, as the market tends to move back to explore value at more established levels. Traders also utilize TPO charts to monitor key price rotations and trend continuations. Rotational days are marked by price moving back and forth between established levels without a decisive breakout. In these cases, traders can profit from fading extremes of the value area, selling at resistance and buying at support. On trending days, however, TPO charts can help confirm whether a trend is holding by showing how value is shifting. If value areas are moving consistently higher or lower, it confirms that the trend is gaining strength, providing traders confidence to hold onto their positions longer. Finally, combining the TPO analysis with other indicators like moving averages or relative strength index can provide extra confirmation and minimize risk. When a breakout coincides with a moving average crossover or a bullish RSI divergence, it adds weight to the trade decision. TPO charts can help provide the context, while these traditional indicators can offer specific triggers and help filter out false signals, allowing traders to be more precise in their approach. By utilizing these diverse strategies and understanding the subtleties of chart patterns, traders can effectively leverage TPO charts to spot valuable trading opportunities, manage their risk, and improve overall profitability. You can also combine TPO charts with other tools in RTrader Pro to make them even more effective. One example is combining a TPO chart with a volume profile. A volume profile shows how much volume traded at each price level. This gives you a clearer view of how the market is behaving. Another tool that works well with TPO charts is moving averages. Adding a moving average to your TPO chart can help confirm the direction of the trend or give you a signal when the price crosses an important level. You can also use momentum indicators like the relative strength index to confirm breakouts or rejections at key levels on the TPO chart. By combining these tools, you get extra confirmation that can help you make better trading decisions. Let us go over some practical tips for using TPO charts in RTrader Pro. One tip is to always monitor the initial balance. The first hour of trading is crucial. If the price stays within the initial balance, it suggests the market is consolidating. If it breaks out, it could be a sign of a trend day. Another tip is to watch for tails and rejections. Tails are areas where price reached an extreme and then got rejected. These areas are important because they can act as key reversal points when price revisits them. Also, keep track of the value area for reversion trades. If the price moves back into the value area after being outside, there is often a good chance that it will move to the other side. This is a common trade setup for traders who use TPO charts. Before we finish, let us cover some common mistakes that traders make when using TPO charts. One mistake is focusing only on intraday charts. It is important to not limit yourself to just the current day. Make sure you look at weekly and even monthly TPO charts for a broader view of the market. This helps you see the bigger trends that might affect your trading, including the identification of key support and resistance levels that might not be obvious on a shorter time frame. By having this broader perspective, you gain context on where the market has been and where it might be heading, which can greatly improve your trade setups. Another mistake is overtrading small moves. Not every price movement is significant. You should be careful to not react to every minor move outside the value area without confirming the trend. It is essential to look for confluence, which means waiting for additional factors to align before making a trading decision. For example, seeing price move out of the value area should ideally coincide with volume spikes, trendline breaks, or other technical signals before you act. Another important factor could be the presence of a significant support or resistance level, which can strengthen the validity of the move. Overreacting to minor moves can lead to unnecessary losses and frustration, especially when trading in a consolidating or low-volume market. Always remember that patience and the ability to wait for the right conditions to align are key attributes of successful traders. Another frequent mistake is ignoring the importance of value migration. When observing TPO charts, pay attention to how the value area shifts from one session to the next. If the value area is consistently shifting higher, it suggests bullish market sentiment, whereas a declining value area indicates bearish sentiment. Failing to recognize this migration can lead to a misunderstanding of market direction and missed opportunities. Finally, do not forget to analyze volume. TPO charts focus on time, not volume, so it is important to use volume analysis to confirm if a breakout or a rejection is valid. A price move without corresponding volume can be a false breakout, whereas a price move supported by significant volume shows genuine participation from market players. Make it a habit to check volume at key levels like the point of control, value area highs and lows, and during breakouts from the initial balance. By combining volume analysis with TPO insights, you can greatly enhance your accuracy and timing in the market. To recap, TPO charts in RTrader Pro are a powerful way to analyze market behavior. They show you where the price spent the most time, which gives you insights into market structure. By paying attention to key features like the point of control, value area, and initial balance, you can identify support and resistance levels and find good trading opportunities. Setting up your TPO chart in RTrader Pro, monitoring key levels, and combining this analysis with other tools can give you a real edge in your trading. TPO charts can seem a bit complicated at first, but with practice, they become a valuable tool for understanding how the market moves. Keep experimenting with different settings and combinations, and soon you will find yourself getting more comfortable with using them. If you have any questions or thoughts, feel free to engage and let us know how you are doing. We are here to learn together, so let us keep building those skills.